Okay, welcome back. Now we're going to dive into pro setups, and these are really some of the probably more powerful strategies that I've ever traded. We can use them in day trading as well as in end of day and position trading. There's certainly some of the most powerful setups that we look for in the markets. And the first one we're going to jump to is the snake down. Now this really is a volume breakdown with a trend. It really does harness the real short term and shorting ability that there is in a market. We're looking at real pessimism. The real strategy here, if we go through the real strategies, I want to break it down into separate components for you. The market itself must be in a downtrend. We're going to look for the stock or the currency, depending on what it is, to be met by a consolidation. We can use these strategies equally between currencies and stocks. The consolidation is then broken to the downside. The consolidation would have short-ranging days, so the bars are very small. And we're going to look at the volume to increase throughout the consolidation. This we're going to effectively call a loading of the gun. We're going to short it as it breaks down. It's a bonus for us if this is away from a moving average. Therefore, we're just going to short before it closes. And we're going to put our stop. And again, we're going to check the character of the chart for our stop to make sure that if it's a very volatile instrument we're looking at, then the stop's going to be higher. But we're going to make sure that we check that first. But as a basic, it's going to be a couple of points above the consolidation. And we're going to try and get a target of twice the run from the consolidation to the run to the consolidation. Now, what do I mean by that? Let's jump to this diagram and you'll see exactly what I mean. So here's the downtrend, volume breakdown with the trend. Then we see the consolidation, as you can see it running along there nice and smoothly, brilliant. And then it breaks down through the consolidation and we look to take a short position on there. Let me just zoom in so you can really see that. We're short as the consolidation gets broken through to the downside. Notice, of course, this stock is in a downtrend here. It then consolidates along, and finally when it breaks through the consolidation there away from the moving averages, that's a simple snake down. It's a classic trade play. Most certainly foreign exchange and high volatility traders are looking for these setups all the time. The reason is they are very, very effective, and it's the reason I show you this strategy first. Nothing sells like a healthy dose of pessimism, as the saying goes, and it really is the case with this strategy. Now, our stop options, where we place our stop loss, can be quite aggressive, as you can see on option number 2 there, which is very close to the top of the bar. The primary, though, would be just above the consolidation, up at that level there. So that's a simple snake down, volume breakdown with a trend. We're looking essentially to measure the base, which runs preceding the consolidation, and we want to see twice the run from the target. So a nice simple breakdown here, nice simple tight consolidation, and when it breaks through, we're looking to go short. Very, very popular trading strategy of mine. I've traded this for years on Eurodollar and cable, which is sterling against US dollars. A very good strategy for picking up 20 to 25 points within a very short space of time. So we're going to look at that as we move on later on. Let's have a look at some examples of that, and you can see Excel here. Let's just zoom in because this chart needs a good zooming in. So it starts to break down here, consolidates along, and then wallop. We're through on this day here, and then the next day again it continues to run. Notice the decent rundown that we have here. Notice the base, and then notice the target from the base. So it's a decent run. Notice also the volume picking up, as we can see here. Notice that volume picking up as we move throughout the consolidation. Yeah, there's a question about Katie.
So how are you working out the base exactly? I can't.
The base is really from the run to the consolidation. So you can notice this movement here. Let's kind of zoom in on that. This would be from wherever it's started its consolidation here to that little run down to the consolidation, where the consolidation starts. We really measure that movement there, and essentially what we're saying is it's a short play. There's already some pessimism in the market. There's a little bit of selling coming in. Then it's consolidating, which means when a stock is moving sideways or anything is moving sideways, people really don't know what's going to happen next. But given that the preceding run was a downwards movement, we'd expect it to break to the downside, unless it had a complete reversal, which would have to then spot via indicators, via other market and secondary measurements. Certainly here we're noticing the downtrend. It consolidates along, a good break to the downside, and we'd expect at least twice the move, as you can see on the target there, to the original base. Okay, so that's a good example of that. Here's another example, a nice snake down on CTT. This is Cattles, and you can see here's the preceding run again. Here would be the consolidation. As you can see, it moves along there, and there's the run as it starts to run down. Okay, conclusion on this on the snake down is we really look for increasing volume on pessimistic selling. We're going to use protective stops, make sure we get in early. The real key thing here is have that order very close to the consolidation point. We do need this to break away from that consolidation. And one point to bear in mind here, particularly if we're going to use snake downs on currencies, we want to make sure that 2 or 3 points has cleared the consolidation zone. Why? Currencies are fabulous instruments to trade, but currencies often do false breakouts. In other words, they'll test through it, you'll get in, and immediately it'll whip back. So let it run plus 3 points, if you will, for sterling, that's GBP versus USD, or euro dollar, that's euros against dollars. Add 2 or 3 points extra outside of the consolidation to get the thing going. You're going to be looking for a 20-point run at a minimum with currencies anyway, so you can certainly afford the 2 or 3 points. So do make sure that you do that. Let's have a look at a practical now, and for those of you that are looking at the pro setups remotely via video, please do download the PDF of Snake Down and Pro Setup Practicals. First we're going to look at now is the classic. It's my favourite, cable or sterling. We're going to find the consolidation, the Snake Down, and find the entry point. So we're going to do that here in the studio audience also, and for those that are watching remotely, please do pause the video now so you can isolate where that Snake Down pattern is, and look to where your entry price might well be. Okay, so group here in the studio audience, where do we see the snake down? I think Paul's got his beady eye on it.
What's that? Mid or 2 is the first consolidation.
It's right there, isn't it?
Yeah, and that's the second one. Yeah, that's the main one there. Yeah.
Yeah, what you'll notice with that, and you're absolutely, it's bang on. It's a 60-minute chart, by the way. If you're ever using any of the more professional packages, you'll notice that we're looking at GBP, FX, and then the 60 here shows us it's on a 60-minute chart. Certainly, it's broken away from the moving averages, consolidates along, and just breaks away again. What you'll notice with currency, just as an ad lib point to this, is that they'll tend to stick when they're starting to trend in a direction. They'll tend to stick to a certain moving average. In this case, you can see it started off at the 20 at the top then. It's just sticking along, really pivoting away from that 10 and 20 period moving average. So what the key real thing to do is here is to find the moving average that it's sticking to and then pivoting off, and then use that for the little 20-point runs. There are literally traders all over the city that simply look at 2 or 3 major currency pairs, trade a couple of setups on those, and really do nothing else. And they become experts in the character of those stocks. They don't need to study 350 stocks on the London, and they could care less. They're interested only in the movement of 2 or 3 instruments that will give them 20 or 30-point runs that they'll take on little pivotal movements away, like snake downs and snake ups, and they'll study the character, they'll know the interaction of those instruments, and intimately they'll understand more often than not when it's going to break, when it isn't going to break. And as we're going to discover as we move into the psychology elements later on today, how instinctively your subconscious mind will start to pick up on those price movements as they then start to break away. Now, we can't just rely on instincts without having a strategy, hence why we have the strategy up front. And then, of course, we apply the hours of practice with those currency pairs, so it ingrains within us, so we can start to see, well, which moving averages do we look at, and then how do we make a play like this. Let's move on to the next one, and this is Intel. You can see it's formed another snake down here, and then starts to trade away. Where would the snake down be here, do you think, Tony?
Through August.
Yeah, that's it, isn't it? That's it, through August, and starts to break away from September. That's it. So whenever we see that downwards movement, starts to track along, a break to the downside, it's a classic pattern, and certainly one that we want to make sure we focus on more than any of the other pro setups. This is a real classic pattern, the snake down.